Good afternoon, everybody. Welcome to TraderMerlin Show. It is your Tuesday afternoon edition. Sorry for the late start. Had a little bit of audio issues on my end, but I think we fixed them. Hopefully we have good audio all the way through today's show. An exciting day to be sure, and I will tell you about the big put position that I just purchased today. So back in the IWM short, but I'll let you guys know about that one as the day progresses. I don't want to waste any time. It is, as I mentioned, your Tuesday edition, the 17th of October. I'm missing a little line on my screen there, but we'll make up for it in the next part. Our discussion for today, we're basically going to have like a trader talk. Typically when Brandon is on the program, we talk about a specific focus subject. And I thought, you know what? One of my favorite things to do as a trader is just to sit with a buddy of mine and just go over markets and kind of what they see happening with different market segments. Maybe it agrees with my perspective, maybe it conflicts with mine, but that's the beauty of trading, and maybe it opens my eyes to something that I have not been seeing. So as the graphic will show you here today, it's Trading Talk with Brandon Wendell, who does look like a cartoon character, all yoked and muscular, and one hell of a chin. He's been hanging out with Jay Leno quite a bit. Welcome back to the program, Mr. Wendell. How you doing?
I'm doing great. Thanks for having me again, Merlin. Appreciate it.
Yeah, good to have you back on. It's been quite some time. What have you been up to?
Just trading, teaching. That's pretty much it. Living life, enjoying life for the most part.
In Florida.
Yes, I'm in an area called Wilton Manors near Fort Lauderdale. It's a beautiful area. Got the canal right out back. Get to go kayaking on the Middle River whenever we want. It's a good life.
Okay, for all the stalkers out there, you know now where he lives. Let's dive right into what's happening in these markets. Obviously, there's been tremendous volatility. We could go into the politics, but I don't like politics too much in this show. Obviously, we've got international conflict going on. We have some global drama that seems to be heating up with Iran and now China maybe getting in the fray. What's your take on the current status of our markets? And you can feel free to show charts if you want. You have the power to do whatever you like.
Sure, I'd love to do that. We might as well take a look at the chart since that's what we focus on quite a bit. So I'll go ahead and share my screen with you. There it is. And right now I'm looking at daily on the ES. Actually, the NASDAQ's probably the better one to look at because that's been kind of the leader dragging everything to the upside. We obviously could see a bit of volatility on the end there with the kind of mixed colors of the candles. Overall, again, let me go to the NASDAQ. But I'm seeing that we are pretty much still in a bearish trend, bearish market. And it doesn't look like it's ready to end as of yet. For Elliott wave technicians, I think that, we got 1, 2, 3, 4. We still have a fifth wave down potentially. And if that's even the right count, I'm not an expert on Elliott wave. I just kind of neophyte, but I look at it from time to time just for the structure of the markets. And just overall, like I said, the NASDAQ had been the leader dragging things up and it ran into that good daily supply right there. And since that has happened, we haven't really dropped quickly, but we're also not rallying at all. As you can see, I watched the RSI quite a bit, and it shows me momentum and strength of trends. You can see that since we started this bearish move in July, we have not been above 60 on the RSI, which is actually somewhat bearish. In order to make new highs, you need bullish momentum, and we're just not getting there. So I see that we are going to be continuing this downward move. I think I'm not sure on the NASDAQ. I think it was about a 50% retracement on the ES. Here is a little bit deeper, about 78.6 that area. But as I was saying, if we're going to continue down, I would see that I got to do the continuous contract now because we're looking back at old contracts. But if we do that, I don't think we have any demand right nearby. You can see I was looking at wave count earlier. I'll remove that. But really, there's nothing to hold us until this buying pressure around 14,250. So a lot of chop, but underlying bearish pressure, I think, will take over and push us down again.
It's funny. While you got your chart up there, I'm on my screen over here, and you guys notice I've got almost the same chart. I just, from a psychological perspective, what I do is I do that downtrend across the top to go back to your peak from July. Oh. And you have this descending triangle. It's just been kind of hitting that support right around 14,609. We're looking weaker, and I agree 100% with Brandon. If you look at what's happened with the NASDAQ, you have a handful of stocks, right? Just a few that have really dragged this thing up. And to me, while it's great if it's working in your favor, most of you are long in a bullish market and loving the fact that Apple and Microsoft and Netflix and Meta and Google are kicking butt. But the question I have for you, Brendan, is when you look at the NASDAQ, for example, you have 103 different companies, roughly 103 different companies in the NASDAQ 100. And 20% of that index, 20% of what you're looking at here is Apple and Microsoft. So does it concern you at all that there's so much power in just those two companies? Because it seems to me like that's part of the reason why we're seeing this thing drift down is weakness within those market segments, within Apple and Microsoft.
Yeah, definitely. I mean, when you take a look, and one of the things I do, I talk about this in my classes a lot. If you look at the ETFs and then go to the holdings on the ETFs, I happen to use MarketWatch. You can use a lot of different sites. But looking at the holdings, you see the imbalance there. Apple is 11.3% of the index, Microsoft 9.32%. So there's a huge overweighting because these are market capitalization weighted, which means that there's a lot of people that own that stock. So in some respects, it's okay because the movement of those stocks will influence a majority of portfolios. But on another hand, it's not really reflective of the economy or the overall markets, really. I mean, you're very overweighted, as you see, in technology, 58% on the NASDAQ. And that, again, has been kind of leading index. If you're looking for how the U.S. economy is doing, I would look more towards the Russell 2000 for a couple of reasons. One, it's more evenly weighted. And you can take a look at the, what is it now, IWM and the weightings there. But also, most of these companies are smaller, so they don't have as much international exposure. And you'll see that, I do that right? IWM Holdings? Yeah. So you can see the weightings are way under 1%. So it's a lot more balanced, and that's going to give you more of an idea. And we go out to the Russell futures as to how the U.S. What did I do here? I spelled it wrong, of course. I only do that in front of people, right?
Only when you're live.
Yeah, of course. So anyway, this has been a much weaker index, although recently we lost some of that bearish momentum. We had a slightly higher low and a lot less bearish momentum there. It's not turning around, though. As you can see, we stalled out at this origin of selling pressure, caught in a sideways channel, and going out to the weekly, again, very bearish overall, seeing lots of bearish pressure. I don't think there's weekly demand just a little below where we are now. And that's why we're flattening out. But if we get a lot of momentum, it'll push right through.
Yeah.
And I see that, they haven't announced any kind of recession. Obviously, GDP and all the numbers have been somewhat bullish. But I think there's kind of like I don't want to call it a pseudo recession or a phantom recession waiting in the background that just Wall Street hasn't realized yet, I guess.
Yeah, I'm not sure what to make of that one. It feels to me like they're trying not to talk about it, trying to play it down a little bit. I'm bearish. I think that we're going to continue to slide down here going forward. I think that the charts you looked at, the Russell, the NASDAQ, the S&P, all drifting slowly lower, not making new highs. And for me, that's primary reason why I've been going short. And, I asked you about Apple and Microsoft because here's some charts for everybody just to understand the magnitude. Apple off its peak is down right now about almost 11%, 10.6%. You look at Microsoft, which was your number 2 holding at 9% of the index. That's down currently 9.47%. And if you look at the NASDAQ 100 index, it's only down 4.7%. So the good news is there's, 98 other securities in the NASDAQ 100 that are helping balance out this. But if we do continue to get selling pressure in Apple, in Microsoft, it's going to slowly drag down this whole thing and bring down a lot of these indexes. At least that's what my perspective is. What do you think?
Well, I definitely agree. I mean, I see that happening. When the big names go down, then everything will go down with it. Sorry, I was looking at a few things on the chat there as well. But yeah, I have to agree with you. I think that we still have a long way to go to the downside. There's going to be a lot of opportunities to sell off the market. And we'll see when it actually hits. Again, we've been in this holding pattern, kind of sideways and choppy for a bit, but eventually it's going to break.
Yeah. Well, on that chart you just had of the IWM, I did go short today. I bought 40 puts expiring in January. So I gave myself some time. Typically I don't typically go heavy directional, but as you guys have heard me talk about, I've been looking to find more shorting opportunities into these rallies up because I just think that the global uncertainty right now, particularly if as I mentioned on yesterday's show, if we do see this escalation, which now Iran has made very staunch or very strong comments towards the United States that said, if you do continue to support Israel, we will inflict pain on Americans, which we don't like fighting words like that. That's a pretty bad thing to be saying. So I opened up short position in that spot that Brandon was talking about just a minute ago, which is that supply level was created last week. So happy to do so. And I only was in 40. I wanted to go in more, but I'll leave it at that for now. Maybe add if we start to break these lows going forward.
And you're talking about the IWM, and yeah, I'm looking at the weekly chart of that, and there's actually a sign that we could get a little bit more bearish very quickly.
Mm-hmm.
We're stuck in a kind of sideways range since, June, it looks like, between basically 200 and 170. And we're at the bottom end of the range right now. However, the momentum on the RSI did dip below 40. The only saving grace for that right now is that before we started that last impulse down on the weekly chart, starting about the 31st of July, we had a little bit of a move up. We failed to make a high, but we did go into bullish momentum territory. But overall, now that we've gone down and we're below 40, which we haven't done since, I guess it was September of 22, so over a year ago, that's a bearish sign that if we do get a bounce, we'll probably stall out at 183 before we break those lows and head down even further.
Yeah, it's tough, especially when you have something that's been channeling sideways. If you look at the futures, I was looking at 1650 was kind of the target off this big head and shoulders pattern that we've had on the Russell on the daily time frame. So that one still has yet to come to fruition, but it has been trending down pretty decently. I don't know if you and I see the same thing. I'd hike that up just a hair, and
Yeah.
perfect. Yep. So that's exactly where I have that head and shoulders pattern, and we broke. We broke it mid-September, and the target, if you use the tip of the head as the measuring object, is right around 1650, which would put us pretty much right back at the lows that we've experienced just several months ago. So I all in all, I'm fine with that. I think it looks pretty good as a short play. But we'll have to wait and see. I mean, again, it's just an opinion about where the market's going to go. We could get nice, big, bullish moves from here. Who knows? And that's the beauty of these markets, is you just don't know what's going to happen.
You always got to put in a stop, just protect yourself.
Yeah.
I actually wanted to kind of shift gears. Somebody mentioned, I think it was Margaret, asked about oil,
Yeah.
and I'm a futures trader, so I definitely take a look at crude oil. Let's see, I'll do continuous right now. And seasonally, I believe that we are normally in a bullish time of the year. I'd have to check to be sure, but people are asking everything going on in the Middle East, why isn't oil going up? And actually, it looks like I'm on a daily, this looks almost like a bear flag, honestly, that we're seeing right now. And again, there's just no momentum in either direction. We're just kind of drifting until, well, I'm not sure until what, to be honest with you. I'm not sure what it is that we need as a catalyst to break us in one direction or the other. But you see, we had that drop, kind of a consolidation before potentially another drop. On the daily chart, there is a little bit of demand here. The origin of the rally at basically the high 70s, low 80s. But if this does want to continue, it could continue down to 74 is the next target there, it looks like.
Yep. 74. Oh, you're on the continuous. Kind of funny. I'm on the continuous contract as well.
Well, I'm not on specific. I'm on the.
Oh, okay. No, they're fine. I was reading numbers wrong. So yeah, I do think that 78 to 80 range is kind of where I'd be targeting it. John just says here, once Iran gets involved, watch out. And I think that is part of the thing for me anyway, is looking at it saying, if Iran does get involved with this, and if this escalates more, then I think it's a no-brainer that oil is going to have a big surge, because shipping lanes will be disrupted and transportation is going to be disrupted, and I'm sure that the Middle East is going to posture against the United States and say, well, you want our oil? Not going to happen. And I doubt Saudi Arabia will side. My guess is they'll probably stay neutral for now. But what's your take on the escalation of this conflict's impact on crude oil?
Well, you would think, obviously, if there's disruption, as you were saying, that the prices would go to the upside. We're kind of stuck right now at that daily supply around 87 and pushing down. Again, the seasonality, normally we are seeing bullishness right now,
Yep.
but for some reason it just isn't. And the overall trend appears to be, like I said, kind of a bear flag, the consolidation that usually leads to continuation. And looking at the height of that move down should take us to 75, 74
Yeah.
I'm on the December contract. I think we just rolled.
I'd be surprised to see that, honestly. But, one thing that I've got a chart over here, which I know my viewers have looked at a few times, and that is expectations about where price may go for crude oil. And I forgot who it was, but one of the viewers had mentioned, I think it was Goldman Sachs or one of these major hedge funds, had said the 150 is their target for oil. And I'm more in the camp of, I took a poll, and I think most of my viewers said yes. I think it was like 65% of you said that we would have $100 oil by the end of this year. So here we are, mid-October. We've got full November, so 2.5 months left. What's your crazy probability in your mind that we get to $100 a barrel of oil by December, by the end of the year?
Actually, I don't see it.
Okay,
I stand corrected. I was just looking at the seasonality, and we already passed the bullish side. Now we're actually on the downturn. You see, the last 5 years historically, we're actually bearish this time of year, even the last 15 years. So seasonally, the commercials know that this is normally a move to the downside. I think that this pause that we're receiving right now, that consolidation I showed on the other chart on crude futures, is because of the uncertainty in the Middle East. But so far, if things are status quo, just a bunch of rattling of the sabers, but no actual bite, then I think we will continue to drift downwards, or at least sideways. If there is disruption and, major issues, let's put it that way, I'm not going to get political either, but then I suppose we could go up. I don't see $100 though. I mean, that obviously the whole number that people love. I just don't see it getting up to 100 on the extreme. Again, maybe I'm too bearish at this, but no, I would say that if we do break out,
right
I
or
would say
wrong
95
answer.
is the
You know
top.
that, right? There's no right or wrong answer. The answer is where you put your money. So, and to be transparent, guys, I don't have any positions open that has anything to do with oil right now. So it's just me hypothesizing about where I might go. So I personally don't care. We'll talk about metals in a second, which I do have positions in, but. If we get there, fine. I think personally, I'm maybe putting too much emphasis on the conflict in the Middle East. And I saw that John was saying once Iran gets involved, Big Eb says, aren't they already? I don't think they are. They're talking at this point. They're saying if the U.S. does this, then we are ready to take action and support Palestine. And once the rockets start flying from Iran, which hopefully they don't happen, then I think you'll really start to see the surge in crude oil. So watch over the next couple weeks. I think that may be the telling sign for us, especially since our reserves are so ridiculously low. We could see some big surge. I mean, gas is it's over $6 a gallon out here in my house. It's by my place. It's ridiculous. Florida, you got cheap gas over there, Brandon. You're lucky.
Well, it's been spiking in South Florida. We get a little bit more than they do in other parts of the states, but yeah. It's definitely cheaper than California. Almost every place is.
Yeah, there's not much that's much more expensive than California, that's for sure.
Nah, I left there and I'm not looking back.
Yeah, well, you got humidity, bugs, and tornadoes. I just have nice weather and expensive everything. So,
and earthquakes.
There've been no earthquakes. None that have rattled me. Of course, I say that now, and I'm probably gonna get one during the show. Thanks for jinxing it. Earthquakes are fine. See, the thing is with an earthquake, I don't have to prep. I have to go to the store and buy a bunch of food. I don't have to huddle in place and freak out. I have to hide under the stairs because the tornado's coming through or batting on the windows. It just starts shaking like, yeah, that's an earthquake. And then it stops and it's all over. So it's much, much easier.
I suppose so. But, where I am, we haven't really had any problems yet. So hopefully we don't. We're almost through the season right now. We're almost at the end here. November's coming up. And, made it through so far unscathed. This year. And
so far, it's funny everybody's speaking of their gas prices. Guys, I read something that said California is 50% higher than the national average for gas. That's just ridiculous. Like, gee, I wonder why we have problems in this state. Anyway, let's move on from that. Do you want to go into commodities? Do you want to go to the dollar? Where do you want to jump into next?
Wherever you'd like to go. I mean, the dollar obviously influences a lot of things.
Let's do the dollar. Let's jump into that.
Sure.
So, we've had this dollar index, which has been vaulting. And, just to set the stage, a lot of people have been asking me, well, why has the dollar been so strong? Remember, we have some of the highest yielding bonds in the world at this moment in time from a government perspective. So, again, people have to buy dollars to buy those bonds. And that's part of the reason that you're seeing the dollar surge. Even though the Fed is trying to retire and take money out of circulation, what you're seeing is people's demand for dollars so they can buy into the 10-year and get 5% on these things for the long haul. So that's part of the reason. But as Brandon will show you, there's a lot more to it. He's got his charts up here. What do you see, Brandon?
Well, I'm seeing that there was a little bit of a turn to the downside, but I think this might be it as far as the move to the downside, because when we had a negative divergence, which usually signals a pullback, and that's exactly what we got there. However, on the next move up, we actually got back into bullish territory. So this is suggesting that we might have put in a bottom here, at least temporarily, on the US dollar. I don't think there's anything to hold us down. No, the next real supply and test would be, I guess, close to 110.
Yeah.
I'm seeing right. Yeah, 109, 110 area. So from what I can see right now, and the US dollar is also kind of a flight to safety, especially if there's trouble in the Middle East. You see it in the Swissy, the yen, and even the US dollar. As you mentioned, money goes to the US dollar to buy US treasuries as well. And if there's trouble, then this could actually go right up to that 109. I think it would have a little bit of trouble pushing through on the first test, but yeah, I think we might have put in a little bit of a bottom. If you're looking short term, you got a kind of a doji here on today's candle, and you really need to break the high of that. If it breaks the low, I just don't see with the momentum right now, it's breaking below 105 before moving up towards 107, 108.
Let me real quick ask you, you mentioned something right there real quick. I wrote an article for Bar Chart, which was released this morning, if anybody saw that one. And it talked about, the flight to safety. And you mentioned the U.S. dollar. If the U.S. does get involved heavily with this conflict, that could add an era of volatility, which may not make it a safe haven. What about, I wrote in there that the Swiss franc and the Japanese yen may be those safe haven locations. What are your thoughts if we have this conflict? Obviously, it doesn't look like Japan's going to be getting involved unless something happens over in Taiwan. If you look at the Swiss don't care. We're in the middle of nowhere eating cheese and making watches. The U.S. could be impacted. So would you have a preference as a safe haven, the U.S. dollar, the Swiss franc, or the Japanese yen, if the doo-doo hits the fan in the Middle East?
Well, I'm still liking the U.S. dollar regardless. Again, it's just becomes a safe haven. Even if they are involved, the bonds and the ratings are still strong. So people look at that as the opportunity. The Japanese yen is extremely weak, as you can see on the chart right now, just diving. There's a positive divergence, so we might get a little bit of a push back up, but it's going to be very limited. And I would not want to go into that. And let's take a look at the Swiss franc.
It's pretty much mirroring
from
the dollar.
Future standpoint. What's that?
It's pretty much dollar. It's very similar, but
for the most part, again, still, it's actually moving up a little bit already. Again, the divergence kind of signals a change in the move, but we didn't go high enough with the momentum. As you can see, it's kind of stuck in the middle there, the RSI right around 50, and we're coming into the origin of that selling pressure, 112. So I still think the U.S. dollar wins out on this one.
Okay, good.
I don't see that these two traditional safe havens would actually work very well for stashing money away. You have to obviously we could take a look at gold as well, but if the dollar gets strong, that means commodities come down.
Well, I guess I got a more important question for you. Should I go to vacation? Should I go on vacation to Japan? Bring up that yen chart again. Would now be the time to go on vacation to Japan?
Oops,
you're gonna determine my 2-week vacation in November. I've been wanting to go to Japan, but I'm like, no, it's too expensive. But I can't ignore this chart is just unbelievable when you look at how much more the dollar buys you in that short window of time.
I know, that's incredible. I mean, that's the weekly chart I'm on right now, and then this impulse I think duplicated itself. Nope, not quite yet. So yeah, it looks like there's still downside. Yeah, I think you need to go.
Yeah, all right, I might have to. In the past, just so you guys know, in the past 8 months, I'll show you my chart real quick. If you go back to January, so actually call it 9.5, almost 10 months, the U.S. dollar will buy you roughly 18% more. That's nice to know. When I go there and buy a bowl of ramen, I get 1.18 bowls of ramen. So I'm going to come back feeling pretty heavy in weight just because I know I'm going to be eating. So, all right, I guess Japan is back on the table. I need to make some plans there. If we go from the 2021 lows, just to put that in perspective, 46% more. That is a pretty unbelievable move up in a currency. And Japan might be a good time to go buy right now. Big Eb says US JPY bouncing around 150 is scarier for Japan. Yeah. Anytime you see a chart that looks like the one that Brandon had there that was just drifting lower and lower, or this one, which is the inverse, this is bad for Japan. Granted, we could buy more goods and services from Japan. However, this is the part that I've talked about with Bill Addis. I just do not know how Japan can't have inflation at this moment in time because their currency is just so unbelievably weak. And it would, to me, it'd be bringing in more money to buying products and services in Japan, which should be driving up those prices. But I don't know. I'll just stick to trading.
Well, I mean, how much are they manufacturing there that's actually going into Japan, or are they buying stuff that's being imported?
Yeah.
So the money ends up getting changed out anyway. So the yen just stays cheap.
Yeah. All right, so you were so now you've convinced me to go to Japan. Great, I'm gonna have to figure that one out. Thank you very much for that one. What did you say, Les? You got double question marks flying through. What you want, Les? What was your question? I must have missed that one. Repeat your question. I'll go to it. Strong dollar affects commodities. How about platinum? So let's go to metals. So if the dollar continues its strength, which I think it's going to, and I think it sounds like you do as well, what do we do for our big four? Gold, silver, platinum, palladium.
Well, let's take a look. I got platinum up here. I'll start off with that one, but this is the weekly chart, and looks like we're just bouncing off a little bit of buying pressure there, but it doesn't look like that's going to hold. Overall, still pushing down. We got plenty of bearish momentum. Again, with the strong dollar, weak commodities is usually what you see, and this is just in a downward channel. So kind of bounce off the bottom of this bearish channel, I suppose. It's not really consolidating. It was, but it broke out, I suppose. I was just kind of drawing the lines there, trying to connect. But
for the viewers out there, Brandon believes in the same philosophy that I do, which is the trend is your friend until the bend at the end. And in this picture here, I mean, if you have questions on what the trend is, this is about as obvious as you can get. Lower lows, lower highs, trending lower. I mean, draw lines, whatever you want. It's not looking good right now for platinum. So I got to stay short.
Yeah, and it looks like we're coming up towards the origin of some of that selling pressure that we had back in October that could reignite another thrust to the downside there on platinum.
Yeah, we're at right around 915. Looks like a good one. All right, so that was platinum. Where are you off to next?
I'll do gold. Why not?
Let's do gold futures. Why not?
Go. And, look at that. Right at the origin of selling pressure there. Let me take a look at the weekly first here. Yeah, very bearish, obviously. We just had that weird bounce, but going back again to the daily chart, that bounce has taken us to possible. Well, no, I can't sell though, because we got a little bit of a move into bullish territory. We might actually just go a bit sideways here. This is not as bearish as I'd like it to be. I would like to see that we failed with momentum to the upside as we came into that selling pressure. We didn't. As you can see, the RSI kind of tipped a little bit above 60, which if it does move down, the first move down will probably hold above 1880. Then it would have to retrace before it could go lower.
Yeah.
So I'm not quite as bearish as you saw in platinum with gold, but overall it doesn't look like it's got anywhere to go. So
I'm with you. That low that you saw there, though, that low was a perfect, not perfect, but it came right down into some lower demand right around 1820 was kind of that, if you zoom out.
Right back here. Absolutely. So
that's part of it. I like that spot right there from a bounce perspective. So we were talking about that one on the show. The question is, is Brendan, he's right. If you look at that trend, it's similar to what we saw with platinum. It's making lower lows, lower highs, kind of aggressive low that we made in mid-September, but now all of a sudden rallying back up. And again, what'll make this different, what'll change the perspective of these commodities, especially these metals, is that these are tangible assets. So when you look at gold and silver, those are typically your safe haven, flight to security type of things. So you can hold it. Keep an eye out on, again, this conflict. If it does escalate, then I think you'll see, regardless of what happens with the dollar, money going into gold and into silver, which is why I'm long both gold and I am long silver. I don't have any platinum or palladium in there. Throw silver on there just for giggles, since that's my heaviest, biggest position I have right now, which I'm actually planning on holding this for the long term. And I think it's going to be a relatively similar theme, is it not?
It absolutely looks that way. Again, you had that bounce off these lows back here at 21. We're at not quite at the origin of the move down, but obviously we paused because this is where some of that selling pressure began, but it's not as bearish as platinum was. Platinum was definitely the biggest bear out of them all. Gold and silver, well, silver looks a little bit weaker than gold as of right now because of the momentum. It's not quite as bullish as we're moving up, but there's really nothing to hold it down. Gold also didn't really have much to hold it down. Just real quick, I didn't mention it, but I was looking at that gold chart, and looking back here, everything has kind of been tested. So the only original, or I should say fresh selling pressure, could be way up here at 2071. I'm not really seeing anything else that hasn't already been taken out. So sideways movement in gold, but if it can break out, it could go for a while. It'll probably take silver with it. Again, same thing with silver. There's this selling pressure here at 24, but above that, everything's kind of been there, done that all the way up till this 26.5 area.
Well, that would make me
So
a happy camper. Although I
I'm
most
sure
likely
it
will
would.
get my well, I've been it's funny because I sell a bunch of puts and then I've been assigned a ton of silver and I'll sell calls against it. I have a bunch expiring this weekend at this Friday at 22, and I have a bunch at 22.50, which I will be holding those most likely. I don't see silver getting above that price by Friday. Although I'd be happy if it did. It'd be fine with me. We close at $20.92, but keep in mind we're at $19 just a couple of weeks ago, so it's been a nice rally up in silver, almost a 10% move just in the past 2 weeks. Let's see if that one continues on up here. There's our silver for the silver futures.
There we go. Yeah, this looks the same. It's a continuous contract, basically. Yep. So somebody was asking about copper as well, which is not one of the precious metals, but metal nonetheless.
And for those who don't know metals, let me just say copper is very different. Copper is not a flight to security. Copper is not let's go to something tangible. Copper is more of an industrial metal, and it's the belief is that when copper is selling off like it is here, you can see that beautiful chart that I'm sure Brandon will talk to at length. When you have a chart like that, it's just a sign that the economy is slowing down, that the need for copper, for plumbing, for electrical wiring and things like that, it's not as in demand. So I wouldn't put this in the same boat as platinum, palladium, gold, or silver, but that certainly doesn't downgrade its importance. So there you go. What are you seeing?
Absolutely. I see that we're going to get a short-term bounce here. The reason why, again, I always look for those divergences because they usually give you an idea of what's going on with the trend. You can't continue trend if you don't have the momentum behind you. And what I'm seeing there is prices moving down to fresh lows coming into this demand area, and there's less bearish momentum to propel it. So we should get a bounce. The interesting thing, as you said, the economy, this is really a measure of the economy, but it's looking forward. It always is looking forward because the copper's in demand before everything goes up, so to speak, as far as the buildings and everything. But overall, still extremely bearish. I don't see anything to hold it down. It's all been tested just like silver and gold, but I just don't see us changing this trend direction. So I would say that if the bounce does come, the only thing it's going to do is maybe test that downward trend line somewhere in the neighborhood of 366 before it continues to push back down again. And this will move obviously opposite of the US dollar. And as you mentioned, it is a totally different play than the precious metals. This is a play on the economy. I mean, they pretty much said it as it is. And yeah, it does still look like it wants to continue to the downside, going even bigger onto the weekly chart here. This is all one big kind of descending triangle that looks like, wow, I mean, it could break down to 250 easy. There's nothing there to hold it if it does break down. But we'll get the bounce first.
Right. Let's do a teaching moment. I want you to zoom out on copper on a daily and just show 2023 and just keep messing with my internet. I'm not sure because the line. Anyway, sorry. That was weird. Anyway, the point I was going to make here is if you look from 2021, yeah, too fancy with the feeds. Sorry, guys. We're back now. If you look from the beginning of 2021, where copper was kind of peaking out in January, if you look over on to the Dow, and my mentor years ago told me, he goes, the Dow is led by copper. I'm like, no, it's not. And not that it's led 100%, but there certainly is a correlation there. So what Brandon's showing you, zoom in just, oh, you got it. Perfect. Oh, you're throwing them on top of each other. Perfect.
Sure.
You look at the orange line that he's got there, which is the Dow. And then the regular candlestick chart is copper. And copper was already showing weakness before. And now it showed some strength back here in 2023. And all of a sudden, when it starts selling off, the Dow is going with that one. So, I do think there's an aspect to it leading the market, leading the economy. And anyway, I thought I'd just bring that up because a lot of people don't understand the correlation between copper and markets. But yeah, you mentioned it's a leading indicator for the economy. If copper is ripping to the upside, expect good things from our markets. If it's trending down like this, your bias should be weakness, if not shorting.
Absolutely. And you can see it. I mean, the Dow is definitely following it. Even this little move to the upside, it's kind of exaggerated from the divergence here where copper didn't really bounce, but the Dow tried to move up. But if the copper does start to push back down, yeah, I would say the Dow goes with it.
What charting platform is Brandon using? He's using TradingView. That's TradingView. Yeah. TradingView is a good platform. Real quick, I know this is totally a tangent, but if you are looking at TradingView, it's a great platform. It's great to use for charts. It connects with a ton of different brokers. There are some tricks, though. I think you mentioned this one to me a while back, which is to sign up. If you do like the 30-day free trial, they will give you all kinds of coupons for like, hey, sign up for a year, we'll give you a big discount, right? Are you there?
Yep. Yeah, I got you there.
Because I think you were the one that told me that like if you do the 30-day free trial, they'll after that trial is done, they try to entice you to buy a year membership and they give you some really good discounts. So don't buy it right now, just do the trial and then get the free discounts.
Yeah, they also have huge sales usually for Thanksgiving too. So if you can do the 30-day trial now, when you get towards Thanksgiving, you'll see that they usually offer like half off. They give you there's ridiculous discounts coming up.
Love ridiculous discounts. All right, so I think on our trailer talk for today was broad markets. We talked about metals. The last one we'll get to before we wrap up here, because I got to get to the dog park. I know, priorities, is the bond market. So we've been talking a lot on this show about the bond markets and just its overall power and impact to the equity markets. A lot of people think, well, bond markets are different. It's just bonds. It is the way that markets grow. It's money. It's capital. And, looking at the futures right now, which is what Brendan has on your screen, it looks like great news for bonds, but it's not. Walk us through your view on bonds and kind of maybe what you see coming up here with the bond market.
Well, I mean, one thing you got to remember is when we're looking at this is the 30-year bond futures, we're looking at the price, which moves opposite of the yields. So when you're seeing prices moving down like this, it means that the yields are rising. And that actually is a slowdown typically for the economy and for businesses, because when businesses need to borrow money for expansion, they're doing it based off of the, a premium from the risk-free rate, which is actually the 10-year, not the 30-year that we're looking at. But if the interest rates keep going up, the cost of borrowing also goes up, and there's less borrowing, less expansion, and a slowdown in the economy. So with the Fed aggressively raising rates, trying to so-called tame inflation in the economy, that's why you're seeing this moving down so swiftly. There's always a little bit of hiccups here and there, but the overall move is still very bearish. And yeah, that long-term is going to influence the equity markets. Again, there's a cycle between all of these. The bond cycle usually goes first. The stock market tends to follow. It's a smaller market as far as dollar wise. I can't remember the actual measurement. It was something like the bond market was anywhere from 10 to 12 times larger dollar wise every single day in trading. Yeah. So this is the big market, kind of the big brother or sister of the stock market. And it gives direction to that stock market too. So since we're already seeing this rolling over and diving, that is a prelude to possibly usually, 9 to 11 months before you see the equity markets doing a very similar move.
Nice. Saba says, so if I'm buying 3-month T-bills, should I care? Good question. Should he care if he's buying 3-month T-bills?
Well, yeah. I mean, it depends on what your goals are for that. Obviously, I think the yield curve is inverted right now as well. If I go out to, let's see, if I can remember where everything is, there's a dynamic yield curve that you can find on some of the free tools here.
Funny, I just searched for animated yield curve, and then that's the shortcut to it.
There it is. Yep. So yeah, you see the dynamic yield curve right now, and we've got this inverted yield curve because the rates on the longer term bonds are not anywhere near where you're getting on the short term. So yeah, if you're getting good rates and you're buying those for the yield, not the price, then obviously you're getting something good right there buying those short term, the 3 months.
You're getting 5.62%. I mean, come on, 5.62% is damn good right now.
Yeah, it is. I mean, compared to what you're going to be getting on the longer term with the 10-year, and you're locked in more.
Right.
And the prices of those bonds, if you try to redeem them, are going to be going down as the yields go up as well. If you're trying to, that's why you're seeing more on the front end here on these 3 months than you are on the 10-year. Plus, this is an inverted yield curve. Not every inverted yield curve has led to recession, but every recession has been preceded by an inverted yield curve.
Right. For Saba, he says if you're buying 3-month T-bills, should you care? I mean, personally, I think you should always care, but let's be honest. Do you really care if the yields move up a little bit over the next 3 months? No. The bottom line is, if you locked in at 5.5% for a 3-month T-bill, you're getting 5.5 for the next 3 months, and you can recycle that next time if when those bonds expire, and you could or the T-bills expire, and then you could buy some new ones if you wanted to. The thing is, we probably are not going to stay significantly high on the short end of the yield curve, right? Right now we're at 5.62 for that 3-month. Forecasts for next year are that short end of the yield curve is going to be much lower, maybe getting 4.75, which would be 75 basis points lower, which means if you want to lock in a higher rate, now you got to start to look at that 10-year, maybe go out a little bit more on the timeline there. So I don't think you should worry so much. I think as long as you're comfortable with knowing that you're locking in for 3 months, great. Great. Just do it. I think it's a tremendous buy. Where do you buy them? You buy them at treasurydirect.gov. Treasurydirect.gov is the place to go.
Yeah, we don't have to pay all the commissions. You can link it right to the bank account for the coupon. Yeah, treasurydirect.gov is the best way.
Yeah, absolutely. All right, so we got everything else here. We got bonds out of the way, equities, commodities. Any last minute things here you want to talk about? Anything on your plate?
No, just like I said, been pretty busy with the teaching and everything. You guys can find me. I usually announce everything on my Twitter account for the most part at TraderBDub. I've been mostly day trading because obviously with the volatility it gives you a lot of opportunities on a shorter time frame. Been doing a bunch of spread trades as well, which is something we've talked about in the past, where you're trading future contract versus a futures contract to take some of the overall direction out of it, but take advantage of in relationships between those two and kind of mispricing between two related securities.
Nice. And if for those of you who might be new to the program, we actually have some previous shows. You can go search my archives at TraderMerlin and find just type in Brendan Wendell or spread trading. He's got a couple that he's done for us. I also have his website up here. You guys have seen that one on the screen earlier, which is brandonwendell.com. That's I'll put it on here in just a minute, but you can go there to find out more information. And as Brendan does more things, he'll be posting different places he's teaching and maybe articles, etc. So you can find out information there. But one great thing that he did mention, if you go to Twitter, which I don't have Twitter up right now, sorry, X, if you go to X, let me bring it up here real quick.
Yeah, that's right.
You know what? It's like, to me, Google will always be Google. And everyone's like, no, it's Alphabet. No, it's freaking Google, man. It's going to be Google. And Meta, it's always going to be Facebook. Sorry, it's just the way it is. If you go to, let's see, I'll bring up his Trader BDub is, that one is BDUB. And there it is. So if you guys look at Brandon's Twitter account, pretty much every day he does a real quick summary of markets looking at different time frames, which I think might be something very beneficial for you guys just to take a peek at. But anyway, check out his Twitter feed at TraderBDub. BDUB is the one there, and learn some more from Brandon. All right, Brandon. Well, I thank you for coming on the program today. I do always appreciate it. Let me turn off the, I'm going to just... Can I exit full screen? I think, no, I was going to try to get your picture back up there. You want to stop sharing and then I'll be able to see your screen.
Oh, yeah, sorry.
No, it's a problem. There he is. Got the handsome mug up. There he is. On the screen right now.
I'm the bow tie right now.
Yeah, what's
I'm
with the
working
bow
from home
tie?
now. I don't have to wear all the bow ties and get all dressed up anymore.
You don't have to do it anyway. It's nice to look the part. Of course, I'm unshaven and I'm wearing, beer shirts from Thailand. So who am I to talk? At least you got a nice fancy shirt on and glasses, so you look sophisticated. You guys can see it says on there's Brandon Wendell's name. There's his contact information as well to find out anything he's got cooking. So Brandon, thank you so much for coming on. I do appreciate it. It's been a long time. Maybe we'll get you back to a monthly scene here. I like running through these charts with you. If only we could have a beer together or something like that, then it'll all be perfect. But maybe one of these days.
Soon, hopefully soon.
That's right. All right, my friend. Take care, and I'll talk to you soon.
You too. Take care. Thanks for having me.
My pleasure. Yeah, that was Brandon Wendell, Trader BDub. You can find out more information at his Twitter account. You can find more information on his website, which is brandonwendell.com. Okay, I'm going to take these earbuds out, and real quickly, I want to go into what's happening out there tomorrow so I can wrap this up and get all the info going. If you look at our economic calendar, I'll bring it over here for you. There is your Wednesday activity. You can see down here in the middle, we've got a bunch of people speaking from the FOMC. So please be careful tomorrow at 9 a.m. Pacific time, 9:30 and 10 a.m. You have member Waller, Williams, and Bowman will be speaking. You also have building permits and housing starts before the markets open. And lastly, TIC long-term purchases, which I will be talking about on tomorrow's show. On the earnings front, oh yes, we do have some earnings to speak of. So let me bring up my Zacks earning calendar. No, I don't get any sponsorship from Zacks. Today, you actually had a continuation. We talked about bank blowouts, right? Well, Bank of America kicked butt on their earnings this morning. So did Goldman Sachs. Now, Goldman was down, but they did beat their earnings announcement. So did Bank of New York Mellon. It was pretty much glory days for earnings announcements today. The only one here on my screen that missed was JB Hunt Transportation Services. Now, for tomorrow, we do have some big names, some real big ones, which is actually going to usher in the first popcorn trade of the earnings season. That's right, I have a popcorn trade, and that is going to be Netflix. You guys can see you got Netflix and Tesla both reporting earnings after market close tomorrow. Tesla will probably be the biggest, most influential one, right around that $800 billion market cap. That's going to have some big swings. So we'll see what they say about their inventories and shipping and all that stuff for Tesla. Netflix obviously will have a pretty big move as well. I don't know which way. But you also have Alcoa, Morgan Stanley, Abbott Labs, Kinder Morgan, Lam Research, Procter Gamble, what else? U.S. Bank Shares, Las Vegas Sands, Crown Castle. I mean, Discover Financial Services, Travelers, Steel Dynamics, Citizens. Holy cow, there's so many things to talk about tomorrow with regards to earnings. So that will probably be the basis of my show for tomorrow. If there's anything particular you guys would like me to talk about on tomorrow's show, or Thursday or Friday, since I don't have any guests, kind of sky's the limit here. I'm open to talk about whatever you want. Just let me know. You can email me at TraderMerlin@gmail.com, or as many of you do, and I appreciate this, you put your comments down below the YouTube channel. On any video, I will see them as they come in, and I will bring them up on the shows for the remainder of the week. So that, my friends, is your show for today. Hope you, real quick, let me just show you a picture of the trade, just so I like to be transparent with you. I think it was a bit risky, but this is the IWM trade. As Brandon mentioned, you were coming right up into this overhead area of supply on the IWM. Now, it's not the strongest supply zone in the world, but we came right into it today. Who changed my color schemes? These should not be pink boxes. Who puts pink boxes? Let's go yellow. There you go. So it came right up in that overhead area of supply. If I switch this into an hourly time frame, it's funny because I was just sitting there staring at them like, yeah, I want to go short. And a couple hours into the day, I decided to go short as we were kind of in the middle of that range. So I did open up, as I mentioned, I'm long 40 puts expiring in January. I wanted to add more, but no, I'm not that comfortable with this level yet. We'll see what happens over the next couple days. If we break above this area of supply, I'll stop out, take a small loss, and call it a loss. Otherwise, I'm targeting that 1650 mark on the Russell futures. Pepe says, Merlin, why the down and then rally of the equities today? I joined late. Why the down and then the rally? Well, anytime you have posturing and global issues, it's going to create a lot of volatility in the pre-market and after-hour session. If you look at the earnings calendar, or the economic calendar, let me bring that up for you guys here real quick. But I'll go back to Forex Factory. You had pretty decent economic news today, which I think, Forex, Forex Factory. You had pretty good economic calendar stuff today, which I think was what helped these markets. Notice that the retail sales numbers, which came out, were way better than expected. They expected it to go from 0.8 to 0.3%. We came out at 0.7. So all in all, while it's a decline over the previous month, it's actually rather bullish, showing a good spending going on. You also had increases in business inventories, which is a good sign. The only one that was negative on the day with regards to economic data was the NAHB Housing Market Index, which barely dropped, not that big of a deal. So I think part of it was rejoicing over the good news from retail sales numbers, and I think that's what caused it today. All right. Well, sorry you got whiplash today. Retail sales data was good and spooked the market that the Fed will raise rates. And yeah, one last thing. You guys are going to get me going long here today, but let's go to the Fed funds futures. So that has started to tick up a little bit, which I think was interesting. So if I look here and bring you that calendar, right now there's a 90% chance that we get no rate increase, keep everything right where it's at the next meeting, which is going to be November 1st, so just a couple of weeks. But if you look out to the December calendar, now it's shifting a little bit. There's a 40% probability they raise 25 basis points, a 56% probability they keep it right where it's at. This is the one I agree with Big Eb that they'll probably hold at the November meeting, and then we may get a raise at the December meeting. But we'll have to wait and see what the economic data looks like. But that's pretty much Pepe why. Let's see. Mike says, really, yellow for supply. Normally use yellow for trading range. I just like yellow boxes. Some people have very specific rules with the boxes. I don't. I think when I use a red box, it clouds my vision. I don't know. I have sensitive eyes. So I like the yellow. It's just kind of subtle. It's faint. I don't really want to, I don't want my eyes to be drawn to the boxes. I'm more interested in that my eyes are drawn to the level itself on the price chart. And there was a comment earlier about the Fed Santa Claus rally. Well, I don't know if we're going to get one this year. Going into the end of the year with a pretty heavy conflict potential looming over our head may not make for the best Santa Claus rally, but we'll have to wait and see at the end there. Will you announce your next OTA class for those of us who are students? Yeah, I will. When I get confirmation. I'm not sure if and when, but if I do, I'll definitely let you guys know. All right, that's going to do it for me, everybody. Tomorrow is Wednesday, and is a show that will be driven by what you guys comment and question down on the YouTube channel. So whatever, underneath any of the videos, put your comments, questions, things you want me to cover for tomorrow or the remainder of the week, and I will do so. So thank you guys so much. Have a fantastic trading day tomorrow, and I will see you on Wednesday. Take care.